Hi folks, Lee Gettess with the Market Sense for the week of July 9th, 2013. The charts I use come from the Trade Navigator software from Gettess. And we're looking at a weekly bond market here, and the bonds have dropped so doggone hard, but it looks like they may have found a little bit of exhaustion at the end of last week. They closed right on the low, and they have not really gone lower this week. 2 ticks doesn't really count. They seem to be, this red line right here, the lower moving average, is 133.08. And were they to use that as resistance, that could continue this trend down. That's exactly where they should stop if they're going to continue the trend down. It looks like they're trying to stay above that. If that's the case, then they're probably going to challenge the middle moving average here over 135. I think it's 135.04. And they could possibly go higher. Actually, a normal move would have them test this swing low that they broke down from, which is all the way up at 138.28. If they don't get back up there and then turn down, you'd expect the move down to be even stronger. And if this isn't what's happening, if they're not really going to get above this and move up here, and they do turn down, then they could be down in the 130.16 area before the week is out. For what it's worth, we're not looking at a daily chart, but Tuesday was the smallest day that they've had in like 4.5 months. And that usually means some sort of big move is getting ready to brew here. It could be either way, but it kind of looks like they might want to try to go back up first. Now, stocks had a nice breakdown here that lasted about 5 weeks and got back to our mid-Keltner channel, which we'd been looking for like forever. And in only 2 weeks, they've recovered an awful lot of what it took them 5 weeks to go down. And they even have a little gap on the weekly chart, which is kind of unusual and will probably get filled at some point. But at this point, they're really doing a pretty good job of breaking above resistance. This little area here between the red and blue line is about 1630 to 1638. They sure seem to be trying to go above that. That may lead to the upper Keltner channel here at 1660, and really they're acting like they want to go to new highs. Now, I'm not sure but what they might find big trouble once they get to new highs, but that's what they're looking like. They're acting like they want to go higher. Now, if they do fail and get back below this red line here, then they could be back down to 1600 pretty easily. And of course, they could even break back down to 1575, and that still would leave them well above the previous swing low, and not necessarily be the end of the world. But at this point, they look like they've bounced up awfully strong after this 5-week downturn. And it sure looks like new highs are in the forecast, but, you know, we got to look for signs of failure. If they do fail in here, then obviously this will look like a big distribution pattern, and that could be ugly. Right now, they still look like they want to go to new highs. So that's what we've got for you today. I hope you can find something profitable to get yourself into. Thanks for checking in to see how we're looking at things.